All right, thank you very much, Ore, and hello, everybody. I would be speaking about growth investing. And to just dive right quickly into it, what is growth investing? Just like the name implies, it's basically an investment style. So, right, it's a style or an approach to investing where you basically look for companies that are sort of expected to grow. So companies basically that are expected to grow over the short to, I mean, the mid to long term. Let me just put it that way. Companies that are probably in an industry or in a sector of the economy that is expected to grow. It could be a new company. It could be an already existing company. I mean, these are also companies that, of course, you expect them, they have potentials, and maybe as a result of their business model, like I mentioned earlier, the industrial markets they are operating in. Also, it could be as a result of probably the development of a new product or service, right? So basically, the crux of it is you're able to see that, okay, this company has potentials as a result of their environment, either the industry, the sector, their product or service, right? And it will be good to mention as well that for growth style of investing, usually the companies in this space do not pay dividends. And why is that, if you ask me? The reason is because companies that are growing or expected to still grow, they need as much cash as possible that is available to them, right? And so when they declare profits, rather than pay dividends to investors, they rather plow back those profits, the profits into their business for further expansion. And so what's the catch when you adopt the growth style of investing? The catch basically is making your returns from price appreciation. So what does that mean? You want to buy the stock at, for example, 5 naira, and expect that it will, as the company grows, of course, you expect that all things being equal, the share price will equally grow. As the company grows, makes more revenue and profits, you expect that the share price will also grow. And so you want to buy it, for instance, at 5 naira, and then you want to be able to sell it at maybe 20 naira, 25 naira, even 50 naira. So basically, you make your money as an investor when you adopt the growth style of investing from price appreciation of the stock rather than dividends. Because again, like I mentioned, just to reiterate, most of the companies in this bucket usually need as much cash or funding as possible to continually grow their business. Next slide, please. Okay, so to just give a couple of indicators that could guide you in identifying a growth company when you want to adopt this style of investment. One is attractive ROEs. What do I mean by ROEs? Return on equity. Basically, what return on equity says is it basically tells you how the company is able to use shareholders' funds to make money. Basically, that's what it tells you. So it signals to you how efficient or how effectively the company is able to turn over shareholders' funds in making money. And how is this calculated? You basically divide the company's profit by the average shareholders' funds. Basically, that's how it's calculated. And of course, the higher the ROE of the company, the more attractive it should be. And it's a major indicator for you when you're adopting this style of investment. Another thing to consider is price to earnings ratio. My colleague Mustafa spoke about this also. Price to earnings ratio basically tells you how expensive a stock is. Now, I should mention that growth stocks are usually expensive. And the reason is because, I mean, if you look at, if you recall your normal demand and supply mechanism, where the higher the demand, the higher the price. Now, a lot of people like to buy growth stocks because they give you significant returns, right? And so because there's always a lot of demand for growth stocks, usually growth stocks are always expensive. So it's something to also note. Another indicator or thing to note here when adopting this style is profit margins. What do I mean by profit margins? First off, you know that the fact that a company is growing revenue doesn't exactly mean that it's profitable. So for instance, if a company is growing its revenue and its cost is actually growing faster than it's growing its revenue, then the company might not be profitable at the end of the day. It might even be making a loss, despite the fact that it's growing revenue. So what profit margins tell you is basically how profitable the company is. I mean, to put it in plain terms, it's your net profit or net income divided by revenue of the company. So basically, it wants to see of the total revenue of the company, or as the company's revenue is growing, what portion of this do you get translates into profit? Basically, it also gives you a bit of sense as to the company's efficiency. Another thing you want to be able to identify as a major indicator is the historical and forecasted earnings growth. So you want to be sure that the company will be able to grow its earnings. That's very, very key. I mean, that's one of the major criteria for a growth stock or a growth company. Be sure that, for a company that has existed, you want to look at the track record of the company over the years and say, okay, how well has it been able to grow its earnings, and how well is it going to be able to continue to grow its earnings, at least into the, foreseeable future. That's also very important. Next slide, please. Okay, so I'll just quickly highlight some strategies that you could adopt, just more or less expanding on the indicators I had mentioned earlier when you're adopting this style of investment. And one is you look for high rising industries. I mean, the good thing about this style of investment is usually the things that are easily relatable, things that happen in our immediate environment, things that, that you and I can see. And so a good example when you're trying to sort of identify high-rising industries is, for instance, the advent of COVID has sort of put the spotlight on the healthcare sector. So you know that, of course, there are a bit of potentials. Just to give a bit of example, another one is technology, right? You know that technology is rapidly growing, keeps growing every time. It's taking over several sectors of the economy. And world over, technology keeps growing rapidly. So, of course, these are a couple of industries that, things that you should basically just look at what is in vogue, look at current trend. If I'm to speak to technology again, you know that some years down the line, for instance, in Nigeria, we used to have something called cyber cafes, right, where everybody used to go to browse. But today, thanks to technology, everyone can access the internet. You can speak to someone anywhere in the world, from the comfort of your living room. In fact, I don't think cyber cafes still exist anymore. But basically what I'm trying to say is technology has grown rapidly. So basically there are pointers around us, things that are in vogue, things that are trending that sort of, could easily give a sense as to identifying what is or put high-rising industries, basically, and being able to know things that would grow again. Going forward into the future as well. Another thing to look at is evaluating future earnings power. And I spoke about this when I was talking about the ability of the company to grow its earnings. So you want to be sure that the company is within a space or it has a product that can grow. A good example is manufacturers of electric vehicles. You know that the world is sort of taking a slight shift from the regular conventional vehicles that we all know to electric vehicles. So that's a new product, for instance, that that, okay, maybe some 20, 30 years down the line, we're going to have more electric vehicles than we currently do have right now, okay? So, you want to be sure that, okay, this company's product would continue to remain relevant, or this country is in an industry that will remain relevant. And so, the company would continue to grow over the foreseeable future. So ability to evaluate the future earnings power of the company is also very key. Another thing is assessing the quality of senior management. And what do I mean? You have to be sure, for instance, I think in law, it said that a company is a separate legal entity, right? But again, we all still say that a company is made of its people. So basically, even if in the eyes of the law, it's a separate legal entity, it's still made up of its people to a large extent. So you want to be sure that the management of the company has the requisite experience, and they can help the company achieve that growth that is expected of the company. And how do you do this? You look at the profile of the senior management or key management staff of the company. If it's a new company, another thing you could do is most times, the management will have worked elsewhere before coming to start the new company. So you want to look at their track record. What's their experience like? Is it relevant to what they are now doing in the company? Do they have the skills? Do they have the competence, basically, to be able to grow, the company as expected? And then the final thing I'll speak about is diversification. How do I explain diversification? It's very simple. Something you and I probably say every day. When you say, do not put all your eggs in one basket, that's basically what you mean by diversification. not putting your eggs in one basket. So as you either start to invest, or if you're a current investor, you always want to have elements of growth stocks in your portfolio. Growth stocks are very important in your portfolio. And the reason is because growth stocks always give you that significant return. They usually grow significantly over time. So, I mean, you expect that, and that at the end of the day, when you have that mix in your portfolio, it helps you in sort of boost your portfolio return and help you, make more money over time. Next slide, please. Okay, so to just sort of bring it home and help us relate more with growth stocks, I'll use these companies to sort of expand further on the explanation of growth stocks. So I have here Presco PLC. Presco operates in the agro-allied industry, and it's one of the leading players in that space. Now, what is the growth potential of the agro-allied industry, if you ask me? I'll tell you that, first off, for that industry, there's significant demand for crude palm oil, because that's at the end of the day, the sort of the product that comes out that industry is known for, crude palm oil. And crude palm oil is known for a lot of things. I mean, it's used by industries and companies for producing soap and other products. It's used by consumers as what we know as palm oil that we used to cook. And so there's significant demand in that space. Now, the good news, I should say, is that the supply is very limited. And so there are just very few players in that space. And because the supply is very limited, it means that the total output of that industry right now is not even sufficient to meet the demand. And so that shows you that there are potentials there. And why is this so? Because there's what I would call high barrier to entry. And then what do I mean by that? There's usually a 3 to 4 year period for you to plant. Okay, so how it works is you need to plant palm trees, right? It's when you plant the palm trees, and at the point of harvesting, you harvest what you call the fresh fruit bunches, and that's what is now produced and processed into crude palm oil. Now, it takes about 3 to 4 years for you to plant and have, from planting stage up until the stage of harvesting. And so, I mean, that takes a while. So it means that if you enter the industry today, you cannot do anything until after 3 or 4 years when you started harvesting, right? And so because of that, I mean, a lot of people would not want to go into it, because first off, you invest a lot in getting land. You need a large expanse of land. So you invest a lot. You're basically tying up capital for like 3 or 4 years before you then start to harvest. And then you then start to have, you can then start producing before you start selling. So basically, that basically speaks to the potential in that space. Another one I would speak to is Seplat, who operates in the oil and gas space. It's one of the few indigenous companies we have, particularly in the upstream sector of the oil and gas industry. And what's the potential in the oil and gas industry, if you ask me? According to data from OPEC, which is the Organization of Petroleum Exporting Countries, Nigeria's proven crude oil reserves is about 37 billion barrels of oil. And of course, we all know that oil today is the major driver of Nigeria's economy. That's on one hand. On the other hand, which is the gas side, according to OPEC as well, Nigeria's proven natural gas reserve stands at about 6 trillion cubic feet. And so that goes to tell you that in terms of the resources, Nigeria is blessed significantly with these resources. So of course, that gives a potential for growth in that space. Also, I mean, there's a lot of demand from industries for gas. Industries now use gas, sort of convert gas to electricity, use gas for powering machines and different things. Also, recently, the president had also approved for, I think, the NNPC or so to sort of start looking at possibility of using gas to power vehicles. So basically, just to also, give a bit of context as to the growth potentials in the oil and gas space. Another one I'll speak about is MTN. I'm sure we all know the telecoms company. MTN, of course, is a telecoms company, and telecoms companies have grown significantly. I mean, I remember in the early 2000s when mobile phone just came into Nigeria, and now, of course, mobile penetration has grown over the time. And then I'll say another thing that has helped the telecom space is, again, technology, data. COVID has sort of been a blessing to this sector, to the telecom space. Why? Because, last year we were on lockdown at some point. and everybody still needed to work, staff of organizations still needed to work, and everybody were using data. So of course, data has grown, at least even if you look at it between March last year thereabout and now, data usage has grown significantly, and there's still more opportunity, right, for data usage to still grow, and so that's a very good opportunity, or a potential, so to speak, from the growth side now for that space. Another growth factor, I should say, in the telecom space is when you look at what the new payment service banking model that the CBN is adopting. The edge the telecoms companies have over the banks is the fact that they've been able to penetrate more people than the banks have been able to reach. And so if you look at the hinterlands, you have places where you do not have banks, right? But you still have at least 1 or 2 persons in those areas that have mobile phones, right? So what the payment service banking model would the advantage to the telecoms company is if granted the approval by the CBN, they will be able to use that to scale and even improve their revenue, by operating that payment service banking, model. So I mean, this just goes ahead to speak to the growth potentials in that space. We also have exchange traded funds on the Nigerian Stock Exchange that have growth stocks, right, as their underlying securities that could also help. I mean, basically, exchange traded funds that are tracking growth stocks, basically, as they have those growth stocks at their underlying securities, and that's also to speak to the importance of or the opportunity, so to speak, for growth investing in the Nigerian capital market. Next slide, please. Okay, so let's look at the global scene now. I mean, Microsoft is one company that is probably a household name that everybody knows. I mean, there's hardly any organization that doesn't use a Microsoft application or software or product, right? And of course, Microsoft itself has grown. Again, COVID has been a blessing to the technology sector. I mean, for instance, we're having this webinar now via a technology platform, right? And I mean, probably a year ago or 2 years ago, we probably have had this, probably wouldn't have had this virtually. But today, everybody has embraced technology. And of course, Microsoft has grown as well, and is still growing. I mean, as technology begins to sort of, inch up into or sort of affect other sectors, that other sectors are basically beginning to use technology. And Microsoft, again, is a name in that technology space that has grown and has potentials. Of course, there are other names. I mean, it's just by way of an example. We have Amazon as well. Amazon is an e-commerce company, right? And e-commerce has grown and is still growing. I mean, COVID again has made e-commerce to be more prominent because, I mean, prior to now, a lot of people still used to go to markets and all of that to buy stuff. But today, I mean, or since COVID, that has increased. The use of e-commerce for shopping has increased significantly. And the beauty of it, again, is riding on technology is the fact that with Amazon, you can shop from the comfort of your home from anywhere in the world. So you don't even have to get a visa, buy a plane ticket to travel and buy products from the comfort of your home, right? You can shop and you get your items delivered to you. And so again, that's just to speak to, the potentials there, and it still has that potential to grow. In fact, I think they've also started a payment service thereabout, if I'm correct now, so basically just telling you that there are a lot of opportunities, when you look at growth companies, and being able to identify their growth potentials is very essential. Tesla is a company that probably was not known some 10 years ago. Today, at some point, the owner of Tesla was named the richest man in the world because of how much the company had grown, right? And what does Tesla do? Tesla is one of the manufacturers or is a manufacturer of electric vehicles. Now, I mean, some 10 years ago, we probably never believed that vehicles will be able to run on batteries but today we're beginning to see it grow, and it still has a lot of potentials to grow. Why? Because, I mean, in Nigeria, for instance, or even in Africa, we do not have a lot of electric vehicles. We have just very few. You probably can count. Even in the developed world, where in developed economies where electric vehicle is growing rapidly as well, you still have a lot of people that do not use it. So that's to let you know that there are a lot of potentials. And the reason why this would also grow is because there's a lot of clamor these days for climate control, climate change, and all those things. And this sort of promotes green energy because, it reduces combustion and all those things because of the way it's powered. So just to give a bit of example and context, and to just wrap up my presentation, next slide, I'll just speak to the benefits of adopting a growth investing style or investing in growth stocks. So like I'd mentioned in the course of my presentation, one is attractive returns through stock appreciation. I mean, growth stocks, if you're someone who likes dividends, then growth stock or growth style of investing is not for you. But growth stocks will always give you price appreciation. So, I mean, you buy a stock at a price, and in like 5 years, 10 years, it grows significantly, right? And gives you that return that you want. Diversification, I've mentioned it, because of the growth potentials or the significant or attractive returns that growth stocks could give you. It's always good to have them in your portfolio because, I mean, they help you to boost your portfolio returns. Also, it helps you to be associated with successful companies because as an equity investor, you're sort of a part owner of the company. When you own a share of the company, you're a part owner of the company. And so any company is expected to grow, is expected to be successful. So it gives you that sense of, being associated to highly successful companies. So imagine, you own a growth stock today in your portfolio, you're happy. When you see it growing, you're like, yeah, I'm a shareholder in that company, right? Also is potentials to outperform the market. When I started my presentation, I said stocks are expected to grow faster than the market, grow faster than the economy. So of course, they have that potential to, outperform. And lastly is, if you use the indicators I had mentioned, besides, other fundamental factors that you need to do as an equity investor, it's sort of easy to identify companies. And again, like I said, the factors to identify growth industries or growth companies are easily relatable. There are things that are trends, things that are in vogue, right? So it makes it easy to, sort of identify growth stocks. That brings my presentation to an end. Thank you very much.